I'm here with one of my favorite lenders in Myrtle Beach, Mike Fitzpatrick, and he's with U.S. Mortgage Corporation, and he is super knowledgeable about the lending process, and I just wanted to get his take on what it's like for home buyers in today's lending climate. So Mike, tell me, first of all, thank you.
No problem.
And tell me, first-time home buyers or anybody who has not bought a property in a while may find the lending process a bit overwhelming. So what would you say is the most important thing that they should do first when they start the process of looking for a home?
I think the most important thing that somebody can do when they're starting to look for a home, if they haven't bought a home in a while, or they're a first-time home buyer, is to really vet the lenders that they are going to, because from lender to lender, their process can be completely different from one another. So not only is the mortgage process completely complex and a very hard thing to go through, but if you don't properly vet the lenders that you're talking to and pick the right one, you can make it a little bit harder on yourself than you need to. So finding that lender that's knowledgeable and in the business and has a track record of closing loans on time is usually that person that's going to make that process less complex, make it easier on the borrower, and is able to thoroughly explain everything. That way the borrower gets an email about something saying, I need this, and they know why they need it and have an explanation as to why.
Right.
So I think that that's the most important thing, is finding somebody that's got the process down to a science, can explain it in a 5-minute period of talking to the client initially on how they can expect to see the process flow throughout the mortgage.
Perfect. And also, as in finding a real estate agent, you're sharing a lot of private personal information and financial information with your lender. So you also want to make sure that you have a good relationship with somebody who is efficient and knowledgeable and that you get along with. There's a lot of lenders out there, and Mike's got a great personality and he is working hard for you. So absolutely agree. How important is it to have a great credit score in getting a mortgage today? And are there ways that a consumer can improve their credit score?
There are ways that you can improve it. Having a stellar credit score is not as important as it used to be. Over the past year and a half, 2 years, Fannie Mae, Freddie Mac, those kind of agencies, FHA, have really loosened up lending, and you really can get qualified for a mortgage down to a 580 credit score if you have a couple of compensating factors like a good high-paying job or those kind of things. So having stellar credit isn't as important as it used to be. However, if you're in that 580 range, it becomes more important to get it up for a better interest rate or lower PMI insurance or those kind of things. So the ways that you can keep your credit score a little bit higher is to keep your credit card debt under a 30% balance. So if you have $1,000 credit card limit and you have $1,000 charged, it's going to affect your credit score. You got to keep it under $300. So that's the easiest way to do it, is to keep the credit usage under 30% on all revolving accounts, and that's going to keep your credit score up.
Great. Can you explain, this is a big one, the difference between pre-approval and pre-qualification? These are very important things that you need to do as you're preparing for searching for your home, but what's the difference and why is it important?
The big difference is, and I like to say that a pre-approval is not worth the paper that it's printed on, mostly because when lenders pre-approve people, they're just taking their credit score, they're taking what's on a 1003, which is the mortgage application, and they're not verifying it with any kind of documentation. So we do both kinds. We'll do a pre-approval, but we're also going to let the realtor know, hey, this pre-approval is based on what the client told me. We haven't verified anything with them yet via pay stubs, W-2s, tax returns, anything like that. This is purely based on their credit score and what they've provided to us. A pre-qualification is something where we actually get documents from the client. We get W-2s, we get pay stubs, we get tax returns. We weed out all of the issues that are going to happen before they ever walk into a property and make an offer. And that's the way that we prefer to do it, but some realtors like it in different ways. Some just want that pre-approval so they can make an offer and get the property locked up. Then we can get through the process by having a 45 or 60-day close time. And then the pre-qualification, if we do the work in the front, we're going to close you in 20 to 30 days most of the time.
Right, and which one is the one where you get the piece of paper that says this is how much we can lend you, that you can use in a negotiation process, say if you're in a bidding war on a home, sometimes it's helpful to have that already vetted out.
The pre-approval or pre-qual, we're going to provide the same piece of paper. It's just the realtor is going to know if I send an email or I call and say this person's pre-qualified, they're actually pre-qualified rather than a pre-approval where I say I haven't verified anything. And the other thing that we do to give clients value and give the realtor value in the negotiation process is I'll either reach out or send a personalized video to the listing agent that they're making an offer on and say, I've personally talked to this client, I've vetted them myself, I've got this information from them, so you can be comfortable in letting your seller know that this is going to close on time.
Excellent. And in a competitive market situation, it's very important to know that you actually can follow through on what you need to be approved for to purchase the home. Can you tell our viewers the difference between a 15 or 30-year fixed loan compared to an adjustable loan? Are there benefits to looking at either one or both? What?
The 15 and the 30, the big benefit is you're going to cut time off of paying the loan off. That's the big benefit between the 30 and the 15. There's an interest rate reduction on the 30 to the 15 as long as with the payment. However, if you have a 30-year loan and you're planning on making extra principal payments, that's the route that I usually suggest. Is you're going to accomplish the same thing as a 15-year loan. You're going to pay less interest, but you're also going to have that cushion as if you have a bad month that you have that lower payment, where on a 15 you don't have that option and you're going to have to pay that higher payment every time. So that's the advantage to that. But adjustable rate mortgages, the only real reason to do one of those, in my opinion these days, is if you know that you're going to sell the property in the first 5 years. If you're going to use it, you're only going to be in Myrtle Beach or in your area for a given period of time because of work or something like that, or an investment. If you're planning on staying in the property over 5 or 7 years, it's not a good idea. The interest rate savings isn't going to help you out a whole lot because with the changes in Dodd-Frank, we actually have to qualify you on what that highest interest rate could be. So back in the day, you could qualify them on the lower interest rate and not have to worry about where the interest rate would go. Now we have to qualify you based on that rate reaching 9% or so at some point. So there's no advantage to doing it that way anymore.
Very good. I have mentioned to our viewers how crucial it is to stop all credit activity once the loan process has started. I have seen people make large purchases while they're in the loan process and screw up the whole mortgage. So why is it so important, and why would you advise people not to make any big purchases while they're in the process of getting their loan?
Well, the biggest reason is if you make a big purchase, it could affect your credit score, which could affect your interest rate. The second reason is it could take you out of debt to income ratio qualification. So if your truck explodes in the middle of a mortgage process and you're going to have to buy a new truck, talk to your loan originator before you go make the purchase, because a lot of the times if you'll talk with the loan originator, there's a way to make it work and still continue with the mortgage process and make it happen. Because if your debt to income ratio number is 45% and then you go buy a new truck and then now it's over 50 and you don't qualify anymore, if you would have talked to the loan originator, you could have figured out a way to keep it under 50 and still got your truck and still got the mortgage.
Right,
so
exactly.
Communication is key when it comes to
that. Communication is key. I've even heard of situations where someone purchased a new phone or they went into a new lease process with a phone and it can knock things out of balance. So just communicate with your lender always about if you have any small question. Somebody like Mike is never worried about you giving a call and just asking a question before making a move like that. What do consumers need to know about the closing process once they have the contract on their future home? What should they expect? Any major things that you think of that happen consistently?
So just for us in our process, when you get the contract, after you get the contract, we're going to get loan disclosures out within that day or the day after. Once the loan disclosures are signed and back, we're going to order the appraisal. And once the appraisal comes back, we're going to order the appraisal and title work and all of the things that go into the verifications for the mortgage, and then we're going to submit it to underwriting. So from when we get your contract to when it goes to underwriting is at most a 2-day time. And that's usually a little bit quicker, and then we get underwriting back within a day. So if you get a contract on a Monday, you're going to have an underwriting approval no later than Friday with us, which is a good piece of mind.
It is a good peace of mind. there's so much. There's so many things that go on in a loan process, and it's really great to have somebody that is happy to explain everything along the way and get things done quickly, because you never know what can come up with a property, with inspections, what have you, and it's nice to know when there's a lender really on top of things. Anything else you can think of to tell home buyers about today's lending climate, or something they might need to know?
The biggest thing is as values increase, there's going to be a need for interest rates to increase over a period of time, just to curb values increasing too much and getting us back into a recession period. So if you're on the fence about buying, or you're just not sure if you can qualify, it's a good time to take a look. That way, if you have work that you need to do, we can find that out. And talk to a knowledgeable lender that knows the process. If it's an FHA loan, they got to know how to handle the FHA or a VA or USDA, and if they're not well versed in those areas, it could become a longer process for you. So it doesn't have to be me, it doesn't have to be U.S. Mortgage, but we want to make sure that everybody has a good home buying experience. So we want to help educate the public.
Awesome. Thank you so much, Mike. I will make sure that you have Mike Fitzpatrick's contact information at U.S. Mortgage, and he can help answer any questions you have on the lending process.
Thank you so much.